joining us now is Tom Lee,
man.
managing partner of head of research at Fundstrat Global Advisors, as well as a CNBC contributor. A month ago, when the VIX hit 50 and there were growth fears about the economy, did you ever waver? Did you have any nights where you didn't sleep as well?
There were 3 days of horror, as the market post FOMC all the way to that Tokyo Black Monday. It was gut-wrenching.
Was it? For you?
Yeah, yes. But we viewed this ultimately as being a growth scare, because we didn't think the U.S. was entering recession, which a lot of people thought after that jobs report. And I think people thought there was systematic risk because of what's going on with the yen. But markets showed a lot of resilience since then. I mean, the fact that we snapped back so sharply is showing you how strong this market is.
Still?
Yes.
The revisions yesterday, not on your radar. Should they be on investors' radar screen? I thought it might be a good thing if the job market was not as hot as people thought.
Yes, I think it is incrementally important because the FOMC minutes that came out yesterday as well showed the Fed staff saying this is a strong labor market. Well, that jobs report that came out Friday and the revisions that just came out show a lot of jobs disappeared. It's not as strong a market. And I think it gives more ammunition for the Fed to start a cutting cycle. And that's going to give a lot of life to the economy.
And to the markets.
And to the markets, especially cyclical stocks and small cap stocks.
Tech's already done well. So normally you'd think lower multiples could or at least multiples don't need to stay where they are or contract with the high multiple tech stocks. So they could at least feel better about the valuations if rates came down.
Yes, that's right. I think tech is still in a good place because of AI, and NVDA should reinforce that. And it's not a demanding multiple. NVIDIA is maybe 28 times forward earnings, which is for one of the most important companies in the world. It's not a high multiple. So if tech is in a good place and then we get Fed cuts, I think it allows the overall market to expand.
Do we see an orderly easing cycle because the Fed doesn't feel like it needs to act intra? They have a meeting where they go 50 or whatever. You think they just 25 and then the next meeting 25, so only do 50 this year and then maybe continue next year? You think it'll be like that?
I think that a soft landing the probabilities are going up, and that's why this should be a benign cutting cycle, like good for markets. But I think the key is the Fed getting off data dependence, because data dependence is the reason they missed the inflation turn, and I think now they're missing the soft landing.
Rearview mirror. But is it possible that they're too restrictive right now, and that the lag isn't? We don't know how powerful the lag effect of the higher rates could be, and they end up doing 50 or doing a couple of 50s? Is that possible?
I think futures markets are showing more than 2 cuts, so I think the Fed probably is a little behind the curve, and we know there is a recession in housing and durables and auto sales, so there was a lot of pain out there. So cutting more aggressively would actually make sense, at least from the market's perspective. Where do you think, well, you're a market cap, but where do you think unemployment tops out? Do we get to 5? Do we go over 5% unemployment? A lot of it has to do with how the Fed communicates to CEOs, because a lot of companies are cautious, right? With monetary policy this tight and real rates this tight, it makes them reluctant to expand. And so the job market itself kind of hinges on what the Fed's doing. And yeah, it could, once the job market starts seeing unemployment rise, it could get bad.
I think Bitcoin's 60,000, give or take. Gold has been hitting new highs, obviously. I think we showed a chart the other day. Kelly was trying to tell me she had been right about
the disconnect.
No, about gold being a bet. So we looked at it over the last 5 years, or I don't know how many years, but gold was up 90% and Bitcoin was up 13,000%.
Okay.
That was that we looked at. So I mean, gold is moving, and it's moving not in a correlated fashion with risk on, whereas Bitcoin definitely looks like it's just a
Does that ever switch?
I think it can. I mean, Bitcoin is just sort of got 2 functions, right? Because it is a risk-on asset, but I think it's an important protection against systematic risk.
Do you ever want it to be correlated to gold?
I think Bitcoin is digital gold, so I think it's replacing gold over time.
So eventually it should act like gold. which means that it shouldn't have the kind of meteoric rise that we're talking about here.
Well, it depends on what the dollar does, because there could be a day that dollar could debase, and then you'd want to own a lot of Bitcoin or gold. But I mean, to me, the fact that gold's rising is showing you there's still a lot of fear out there. I mean, I think gold is almost a measure of the bearish sentiment, and that's why I think stocks still.
Do you have? Can we talk politics for just 1 second? Do you have an election prediction as it relates to the market? Do you think the market is do you think anything we're seeing in the markets has anything to do with what's going to happen in November?
Yes, to an extent. I think the markets are believing Trump's probabilities of winning are stronger than the polls are showing. But I think when the market sort of becomes more convinced of that, I think you'll see cyclical stocks do better, small caps, Bitcoin do better, because these are really clear policy differences. But yes, to me, I think over the last couple of days, to me, the market seems like it's betting on Trump's odds being better than the polls.
Alright guys, this is the part of the video where I'm going to break down the stocks and ETFs that were mentioned in the CNBC clip. Today we're going to be looking at the NASDAQ, the SPY, the Russell, the Dow, the VIX, and NVDA with earnings coming up. So we'll briefly break down those stocks and ETFs. If this is your first video guys, the blue line is the 45-day moving average and the green line is the 200-day moving average. You can see today we're having a nice pullback day, but we're also well above the 45-day moving average and well above these white ascending trend lines on most of these stocks and ETFs. So it could just be a pullback, could just be a cooling off period. We had a massive run. Let's just check it out. On the NASDAQ, we've run 14.5% straight up, guys. So to have some sell-off, some sideways consolidation is not the end of the world. We also do have Jackson Hole meeting tomorrow with the Fed. This could be a little bit of anticipation of what he's going to say and if he's going to be bearish. And then don't forget we have NVIDIA earnings on the 28th. So a lot of stuff for the market to digest, but I would say most of this is because we've had such a strong run and we're having a big Jackson Hole Fed meeting tomorrow. So right now on the NASDAQ, it looks like we're having a cooling off period. I expect us to come back down to this 45-day moving average and this white ascending trend line first, then maybe chop around, and then that's when it's going to be the decision point if we're going to break through it and continue bearish, if we're going to hold it, consolidate, and continue back to the upside. There is a lot of weight placed on what Jerome Powell is going to say tomorrow at the Jackson Hole meeting, so it's definitely going to be choppy until then. We've got the VIX spiking almost 8% today, so that is showing some fear, but again, we've had a massive run, so this is not the end of the world yet. Onto the S&P 500, you can see we're not panicking at all. We came straight back down to this white ascending trend line. We're not fully there yet, so we could have a little bit more of a sell-off. So we are still looking bullish. As long as we hold this white ascending trend line that we've held for months and months, the bullish pattern is still back on. And guys, a run like this, most of the time, is not an accident. You don't drop down and have this much panic and then have this big of a run just to come all the way back down. Now, it definitely could happen. You could argue we have a double top up here, so that's starting to look a little ugly. If we have this double top and we don't go any higher and we start to break these trend lines, we can't hold the 45 and we continue lower, that's going to start to look pretty bearish. But as of right now, we're still holding up, looking bullish. The Russell 2000, Tom's been very bullish on the Russell 2000. He's saying we're going to gain another 40% by the end of the year. Same thing. There's very little panic, guys. This is just a normal sell-off. We didn't even go lower than the day before. This is just a normal cooling off period after a massive run in just about every stock in every market. If we continue to go lower, the first stop's going to be this 45-day moving average, so keep an eye on it. And if we can't hold that, we're going to be headed back to the 200-day moving average or even the $2,000 price range. But Tom is pretty bullish and pretty optimistic on small caps, so we'll just have to see how tomorrow plays out. Now here's the Dow Industrial Average, almost the same thing. They all have this white ascending trend line. We broke through it with panic, we regained it. Now we're just having a nice cooling off day to where we can get back to that line, make it a nice support, and continue higher. So all four of the major markets had a panic phase, had a gigantic run back, and now we're just having a cooling off period where we have not breached this white ascending trend line back to the downside, which is all bullish signs on all of the four major markets. Now the VIX has cooled off tremendously. We went from almost 66 all the way back down to 15, which is very normal, but we have made a nice little support on this 200-day moving average, and we're breaching back above the 45-day moving average. So there is a possibility that it's setting up for another little scare. Remember, the higher the VIX goes, the more panic there is in the market. So the fact that it's heading back up means means people are starting to get a little fearful, but real fear starts around 20, 25, and 30. So we still have quite a ways to go. The Fed's talk is bullish, and he lays out a nice plan on how we're going to cut, and the market likes it. We're going to be off to the races, guys. NVIDIA, the biggest stock in the market right now. Look at the gigantic run it's been on. In the last couple weeks, it's ran almost 45%, guys. So this one-day sell-off is nothing. Look how far we are above the 45-day moving average and this white ascending trend line. We can come all the way back down to either the 45 or the ascending trend line and still remain bullish as we turn around and make them support and head back to the upside. So this is kind of in no man's land right now. It had a huge panic phase, it had a huge run, and now we're right in the middle where we can go either way, and it's not really going to change the direction of the NVIDIA stock. What is going to change the direction is what these earnings numbers come out. I'm expecting them to beat and have a great guidance ahead. Guys, they still have so much money coming in for the next several years. We're still in the middle of this NVIDIA chip cycle. I don't think we're anywhere near done, and I bet the earnings are going to reflect it. Remember, these are just my thoughts and opinions. I hope you guys enjoyed the video. If you did, smash that like button and subscribe, and I'll catch you in the next one. Peace.